So into the charts we go, and we do have a rally in risk assets that includes Bitcoin. We have the stock market rallying today following the CPI data. Now, the CPI data did come in a little bit higher than expectations, but if you looked underneath the hood, it was essentially in line or maybe even continuing to show that things were better than expected. So ultimately, the markets early in the day were down and have slowly gained traction and rallied to the upside. And you can see that on the daily Bitcoin chart here. We actually were down here on the day, right around 21,500, excuse me, and then rallied all the way up. We're currently trading at 22,200. Now, the big thing on this chart, and this is important, folks, the big thing to watch is what type of angle do we form in this bearish consolidation pattern. Remember, when you're looking at bear flags or in spirit of bear flags, it's important that the angle remain at around 45 to 90 degree angle, right? So what I would say is from this flat bottom right here, this is your 45 degree angle. This is your 90 right here. So right now, even today's pop would still fit inside of that in spirit of bearish pattern. Now, if we start to get up here, then that could change, right? If we start to go much sharply higher, then you kind of negate that bearish consolidation pattern, and then obviously that changes the probabilities of the trade, all right? But right now, the pattern, again, is still within that 45 to 90 degrees, and again, therefore, it would be considered the potential for a maturing bear in spirit of bear flag. All right, so just something to keep an eye on there. And again, this is getting into the nuances of trading, but honestly, this is important stuff. And again, just one other tidbit of education that I'll throw out to you guys is that remember, the steeper the angle of the flag, the less the probabilities of it playing out. So basically, when you have a perfectly right angle bear flag, like right along this, that is going to give you the highest percentage of a breakdown. As you get inclined more and more, the probabilities decline of it playing out. Now, they're still above, as long as it's a 45 degree angle to 90 degrees, the probabilities of the bear flag playing out are still greater than 50%. I would say at a 45 degree angle like this is, it's probably at around 70%, right? Assuming it matures and all that. If you get over that and the angle becomes steeper, let's say it's only a 25 degree angle, now all of a sudden the probabilities shift to 50-50 or even lower of the down move playing out. So again, a lot of people don't understand this, but it's very nuanced, and it's an exact, in a weird way, it's an exact science of saying, okay, what's the angle here? Okay, wait, that angle is right here, so that says that the probabilities of XYZ occurring are this. Okay, so again, just something to keep an eye on. Now, on the upside, if we continue up, see all of this area right here and see how it connects right through here and through this low, that will be minor resistance, right? So again, I'm going to put in a trend line right there, and again, we're going to just draw it right there, all right? So right here, that is going to be minor resistance. What I'm going to do is I'm going to drag it out a little bit further. So again, if we were to go up here, that will be a little bit of resistance. After that, you're basically following your topping tail high. And again, the topping tail high is going to be the key level ultimately for whether or not Bitcoin can reverse, can break to the upside, and go up and start moving towards that 25,000 level. You got to close above that topping tail high. Okay? So there's a little bit more of a tidbit there. Now, if this bear flag, in spirit of as it is, were to start to break lower and we take out 21,500, 400 here, then you have your down move to this level at 20,006, and then ultimately to about 18,004. That would be your low end here of your big support. And 18,400 will be a lot of support. I discussed how that level is support, plus the upsloping trend line is coming closer and closer. Every single day, this upsloping trend line is getting closer and closer to that 18.4-ish level. Okay? All right, so that's one of the things we want to kind of just keep in the back of our minds as we continue to watch the price action unfold. If we go to the dollar chart, now remember, the dollar chart was telling us that we had a bull flag, and I thought the CPI could trigger a move on that. And the answer is it didn't. You actually got a flush, then you got a pop, and you're basically flat to positive on the day. And if we zoom in, you can see you have a very small green candle, which shows that from where the dollar opened, we're slightly higher on the day, ever so slightly. Now, again, interestingly enough, the bull flag is still fully intact, right? So if we put sideways and look at the angle of this, it's basically a 90-degree angle. So with this pattern actually does continue to tell us that probabilities pretty highly favor a move to the upside. So it's one of the reasons why that bear flag continues to have a priority on the Bitcoin chart of moving lower, is because it also is confirmed with the bull flag on the dollar. And remember, if the dollar generally goes higher, the risk assets like the stock market and the crypto market generally will go lower. Okay, so just a few little tidbits there that I think continue to be very, very important when analyzing this chart. Let's go to the Ethereum chart real quick. The Ethereum chart, again, you could see we still held this level, getting a beautiful pop on Ethereum. One thing to notice here, look at this trend line. So this upsloping trend line was one we broke and confirmed below. We then hit this area at 1500. Now look at the bounce off of support. So support dictates a bounce. Look at the bounce. Where's it going? Where's the high of the day? Virtually back to that trend line, back to that level, which again would be referred to as the scene of the crime. Now that is confirmed resistance. We confirmed below it, so it is confirmed resistance, which means it's going to be major resistance, not just minor. And again, that means that, again, it should be a little bit harder for Ethereum to break through to the upside. If Ethereum starts coming down and we take out this level, this is your next major support at $1,320. Take a look at Solana. Solana getting a little bit of a bounce here. The Solana chart continues to be bearish. We have number one, this trend line here, which is still resistance. We touched it again today. But more importantly, we have this sideways angle, which is around a 45-degree angle from this low. And that, again, is an in spirit of bear flag. So in spirit of bear flag, again, probabilities signal that the likely move at this point would be to the downside on the Solana chart, and the target is 1760, 1765 to the downside. If we take a look at Polkadot today, Polkadot getting a little bit of a bounce. Notice the support level that we had on the chart. It did hold. Yesterday we had a nice flush intraday below. It closed back above. Today we touched it and then rallied to the upside. So again, the big question on this is, can it start to make a move back up? Can it reattack this high? If it does, can it get through and go to the $7.40 level on Polkadot? Okay, let's take a look at a few others here as we continue to scroll through. Number one, let's take a look at Matic, see what Matic's doing. Good bounce on Matic. Many of you guys have wondered if I would re-short this level. Remember, I barely missed getting filled on a short here on Matic. The answer is no. It would have to be a higher level for me to pull the trigger. Anytime you hit and pull back off a level, that level essentially is done. So I'd now have to look a little bit higher on the chart. There is a little bit of resistance around 150. 150 potentially could be a shortable level on Matic. If we look at Avalanche, which we did take our money and run on, remember we took it right off of here. I explained to you guys at the time that that was the way you move in and out of positions. You slowly inch into short positions and you slowly cover them on the way out. Same thing with long positions. You slowly inch in and you slowly inch out. That enables for best wealth building. Most retail investors obviously think that, hey, if I go all in right here, I'm going to make the most money because, oh, I can't be wrong. Subconsciously or consciously, they just get swept up in the moment and just think about the money. It's like when you play the lottery. You don't really expect to win, but even so, you still in your mind figure out how you're going to spend those 100 million or 500 billion, whatever it may be. Whatever the lottery is, you figure in your head you're just already spending that money. Like, what am I going to buy? Same thing occurs in investing. It shouldn't, though. Investing is a singles and doubles game. Always look for singles and doubles. That's how you build wealth. Naturally, you'll hit a home run on occasion. I do that. I still remember BIIB was a stock that I was in with. I had it down here, right? And we were kind of up a little bit on the trade. Then we were flat. And then I woke up one morning to a massive gap higher all the way up here. And again, did I expect that? Not at all. But that's what I mean by when saying, just naturally you're going to hit a home run once in a while, but you don't go into a trade saying, oh, this is going to be my home run. That's how you go broke. All right, and this is a great example of it. All right, so again, just keep that in mind. So important to kind of just singles and doubles make you a millionaire. Always remember that. You're not looking for the home run. You're looking for hardcore setups, high probability, rinse and repeat, do it over and over and over again, and before you know it, that account grows and grows and grows and grows. All right, let's go over a couple other charts. Remember, BNB was getting hammered yesterday on the SEC news, and you could see today it did bounce off of technical support, a little bit of a support there. Again, we talked about if it were to flush to 250, that might be a little bit of a level there. XRP, let's take a quick look. XRP getting a little bit of a move up, still has to get above this trend line and then confirm. Over here, it never, ever confirmed. And again, confirmation is continuing to be one of the most important things that I ever use in the markets, in all asset classes, on a daily basis. We'll take a look at a couple others here. Trying to think of what else we have there. We could take a look at Chainlink, is usually a fun one. But still, yeah, there's really nothing here in the chart. I do love the multiple parallels, though. Parallels repeat. There's basically what I would say is look at this trend line, look at how these pivot tops are parallel to this, which is parallel to that. And again, just by eyeballing it, I can even see that there's another kind of pseudo parallel kind of like right in here, right? So even there's 1, 2, 3, and then you arguably up here, there might even be another one right up here, right? But the bottom line is I don't know how it happens. And again, I'm not going to pretend to know the inner workings of the human brain. I just know that if you follow human psychology, there's a natural tendency for us to try to make sense out of chaos, right? And that's how these, somehow we try to we just subconsciously, we're like, oh, this seems like a good sell level to take profits, or this seems like a good buy level to get in. And then if you look at the charts, there's some sort of Fibonacci in there. There's some sort of amazing kind of, data in there that makes sense when you take a step back and look at it. All right, guys, I'm going to get going. You guys have a wonderful rest of your day. I wish you all the best. Let's see what the crypto market has in store for us tomorrow. Watch that dollar bull flag daily chart. Keep an eye on the Bitcoin bearish in spirit of flag pattern for now. We'll keep track of it as well. Take care.